In this episode of Net Lease TV, we interview Alan Fruitman, Tax 1031, Barry Wolfe, Marcus&Millichap, Carly Iacono, Marcus&Millichap, Michael Lin, Progressive Real Estate, Ted Dowding, and I'm your host, Chris Marabella, Net Lease TV. Comment below. We want to hear your comments, questions. Hey, everybody. Welcome back, Net Lease TV. It's Wednesday, August 26th. And this is kind of an update from when we last had Net Lease TV with a group. There's some new faces here. Barry Wolfe, Ted Dowding. We're missing Jesse Lyman from last time. Hey, Jesse, if you're watching, we miss you. Keith Sturm, I don't know if Keith's going to be able to make it, as well as Matt Barris, who we had last time around. So this is kind of just an update, what everybody's been up to, who's closing deals, who has some deals in process, where are the opportunities right now. Let's start out with Carly. Carly mentioned that she just recently closed a deal. Tell us a little bit about it, and what did you close, Carly?
Absolutely. Hi, Chris. Hi, everybody else. Good to be back with the Net Lease All-Star team. Yes, so we closed a deal yesterday and today, so just less than 24 hours ago. It was a Walgreens in Orlando, Florida. Unique deal. It was subject to a zero cash flow debt structure, which had to be assumed by the buyer, and it was a leasehold interest. So we had a few challenges, but we were able to transact it at 100% of list price, and we did have multiple offers. So really unique structure, but a lot of demand.
How long was the lease between the building and the landowner?
It goes out to 2062, and the debt was fully self-amortized before the base term of Walgreens expired, which I believe off memory was 2039. So we had about 19 years left on the base term, and then the leasehold lease went out to 62. And
I know that you've mentioned this to us before on that other, I think you did a Home Depot similar. How much over the debt did your client have to come to escrow?
15.5% equity over the debt, which translates to about 12.5% equity total in the deal.
So they had how much, what does that equate to dollar-wise?
A few hundred thousand. I want to say it was 400,000 of equity, very minimal.
And what was the purchase price again?
Actually, no, it had to be a little more. The purchase price was just over $4 million, about 4.1.
Wow, that's amazing. So they came in with, you think, less than $1 million, and now they control a property, a Walgreens leasehold worth about 4.1.
Correct.
And
so extremely high leverage.
What happens if Walgreens doesn't renew and, at the end of the lease term? What is it? So does the landowner end up with the building?
The leasehold owner has a few options. They can release the space and take over the ground rent payments. They can walk away. The debt will have been fully satisfied at that point. So it's really just an equation and how they want to handle the asset moving forward. But they do control it all the way to 2062, so they have options.
And do the passive income get washed by passive losses with the depreciation? Is that one?
Correct.
For them doing that?
Correct. So obviously I'm not a tax advisor, but a lot of the drive for zero cash flow deals are tax advantages, and creating passive losses is a perfect example of that. Usually phantom income doesn't kick in until year 10 to 12, depending on the depreciation schedule.
Do any of you have any questions for Carly about this transaction before we go to the next one?
I just give her kudos. I mean, a zero cash flow leasehold deal. I mean, holy.
Thanks, Barry.
In the middle of a pandemic, I mean, man, you're my hero.
I second that. Leasehold deals are tough. The low equity helped, but bravo to you. Nice work.
Great.
I appreciate it.
Congratulations.
It was right by SeaWorld Orlando, which was really exciting until, SeaWorld wasn't open and we had no traffic and nobody coming near the store. But hopefully that's changed already. So
SeaWorld, the one that's got like the funky blue, not awnings, but coloring and directly next to a Wawa.
Correct. Yep. Yeah, it's that one.
Great looking property. That's a phenomenal. I guess that is a fantastic property, but still, I mean, kudos. That's a tough sell.
Structure.
I know the guy that developed that, I believe, but yeah, it's a really good property.
Thanks.
What was the due diligence? Was there like due diligence period, financing contingency, and what was start to finish closing?
It was pretty quick, actually. We had a standard 30-day due diligence period, and then we had a loan assumption period, which we got done within 45 days. We actually came in a little ahead of schedule, which was good. The loan servicer is Wells Fargo, pretty straightforward. It was easy to handle the assumption process. And it was one of the smoothest deals I've done in months. But that also had to do with the fact that both the buyer and seller we were representing, and they were both fairly sophisticated. So it was easy to get everything done that we needed to do.
Was there any hair in the deal that you encountered? Was the environmental clean? Any kind of hair that not? Was it a repeat? Was it a repeat client or a new client for you?
The buyer was a new buyer who actually had found us through our CRE Fast 5 video series, which was great to meet him. And the seller that I listed the property for is someone that I sold properties for before, repeat client.
Was he in a 1031 exchange?
Both. Yeah. So the buyer was in a 1031 exchange and acquired the property for his up leg, and now the seller is starting his 1031 exchange.
Are you representing the seller now on the up leg?
Of course. That's the magic, right?
So you guys, if you have any properties.
Exactly.
And I'd love to find out, does he have to replace that on the up leg? I guess he does, right?
He does. He has some options, but yes, he will be financing and leveraging. So we'll talk. His next purchase.
Is he gonna go CTL again, or just like conventional?
We're not sure yet. We're not sure yet. His investment strategy shifted a bit, so we'll see. We'll see what he ends up with, and then we'll match the debt to the asset. He's very much location specific, which is why he bought this Orlando deal in the first place. So prime real estate is the focus.
How much cash does he have to put into a new deal now? If you can share that, Carly.
Yes, you really need to replace the debt and equity coming out, but you have the option to add more cash as part of the 1031 exchange. So you don't have to have the same high leverage if you're willing to add more cash. It's just the total value must be the same. So he's working on a few different scenarios to make that work.
Awesome. Thank you, Carly. That's an awesome transaction. Congratulations.
Thanks, Chris.
Congrats.
Okay, so Michael Lin, Michael Lin's out here in California. What was your deal?
Sure. So a couple weeks ago, I closed on a strip center. So not your typical net lease deal that you guys work on, but that's what I focus on, more strip centers. So during the past couple of months, strip center sales have been pretty challenging, and this one in particular was a mom and pop strip center. So I looked at comps, and of the very few strip centers that have been trading in this area, most of them had very strong national tenants, and the typicals. That you see that are often single tenant, but we had this strip center. We went out to market right before the pandemic hit, and as you can imagine, when everything got shut down in California, there was like no activity, and everyone was scared. No one knew what was going to happen. But after a couple of months, activity started coming back. Got a couple offers, a lot of cash offers. People just wanting to lowball, but we hung in there, found a buyer. One of the challenges during the process is one of the tenants decided to leave, because of COVID. They had a couple locations. There's Metro PCS. They decided to consolidate, and when their lease was up, they left right in the middle of marketing the property. So that was something we encountered, but we hung in there. The buyer was putting 50% down, so they were able to get a loan to buy this property, and we managed to get through the loan process, which took a little bit longer than normal, but successfully closed. So that was, that's one of the deals I closed. But strip center sales are tough right now.
What county was that in, Michael? And how long were your remaining primary lease terms? Was there any credit? It sounded like mom and pop deal. What was the purchase price? Give us some specifics on, if you can.
Yeah. This was in the city of Highland, which is San Bernardino County. There was one credit tenant in the property, which is Little Caesars, but we had an independent.
This deal, because we did an interview on this deal.
Sure, yeah, we've talked about it, and I've put it in my videos. But Little Caesars had 4 years left on their lease. There was a nail salon whose lease was up in a couple months. The hair salon was just month to month. The church had like 1 or 2 years left. So, not a lot of term, but your kind of typical bread and butter strip center.
Awesome. Is there, so was that a 1031 buyer?
Nope, wasn't 1031 buyer. The sellers aren't going to 1031 either. So just a straight sale.
Was it a buyer from Inland Empire?
Yes, the buyer has a couple other centers in the area, so he was familiar with the area.
Go ahead,
Carly, do you have a question?
Can you share the cap rate, or did you and I missed it?
Oh, sure. It was sold for a 6.4 cap on the actual income, and it was 71% occupied, so there was some upside there for the buyer.
That's great for a multi-tenant strip in this environment. Good job.
Thanks.
Congrats.
Anybody else have questions for Michael? Yes, no? Okay. How about Fruitman? Yeah, have you done any deals? Are you close to having any deals done? What have you been up to since our last interview?
Nice to see you again, everybody. Nice to see you guys again. Last week I closed 2 deals. One was a really oddball property. After 28 years, this was a unique one for me. Both were unique, actually. This was a ground lease with 2 freestanding single tenants, a Burger King and a Jersey Mike's.
Oh, yeah.
New construction, listed by Marcus&Millichap. I brought the buyer, but listed by M&M. And it was about $1.8 million for both properties on a ground lease. Really interesting deal. A lot of equity built into the deal. Very unique property, but it was my first of that nature, so it was kind of fun.
Was that in Wisconsin? I think I saw that deal on Crexy on comps. In fact, I tried to do some. I didn't know you were representing the buyer. It had the owner and some other stuff.
Yeah, no, it wasn't there. It was in New Mexico, and nice clean deal. It was I think my 5th or 6th property for this same buyer, cash purchase, very easy. Second, it was really nice because 6 months ago I closed with the same Marcus&Millichap broker with the same buyer. So when I came in the second time, it was turnkey for everybody.
How quick did you close? What was the time frames, the critical time? Was it an exchange buyer?
It was an exchange buyer. I think it was 25-day contingency and close after 10.
That's quick.
10 days after that. Very easy deal, clean deal.
What was the other one you did? And then we'll take some questions from everybody else.
It was called IMA, also a Marcus deal in Florida, and it's a single tenant medical property.
Nice. And was that an exchange buyer?
It was an exchange buyer. He actually found the property online and sent it to me to run the deal, which was nice.
Yeah, Fruitman, well, you've got an awesome reputation. I would use you too to consult me. You've been at this so long now. It's like having a Sherpa.
Okay.
You get them up the mountain and down alive, right? Without any drama.
Thank you.
Does anybody have any questions for Alan?
Alan, got a question. In terms of inventory for buyers, how are you seeing inventory now versus a couple months ago or last year?
That's a great question. And it's kind of a multi-part question for me. Number one, I've changed the type of inventory that I'll show my buyers because pre-COVID, the Outback Steakhouse and the Chili's and the restaurants where you sit down and are served, I sold many of those, but in this COVID and post-COVID environment, I find those more challenged, so I don't show as many. And the inventory that I do show, there's still plenty of inventory, but it's maybe a little less than before.
Okay.
Any other questions for Alan? Congratulations, Alan. That's great.
I had a quick question on the medical net lease one in Florida. What is IMA? Is that connected to a hospital chain, or is it a local regional tenant? What's the background on them?
Yeah, regional tenant.
Okay.
What's that?
Urgent care or?
Oh, it's No, it was more of an office type use than a retail use.
And just so you know, we referred Alan, one of our clients, that we did a Bank of America deal in around April. So I did that deal. That was an acquisition. He was in a 1031. He owns an In-N-Out. And so we want to pull cash out of that. If you guys want to send some opportunities to Alan, Alan's working with our client to try to find him something. And the game plan would be to pull out about $1.8 million to $2 million, and then either buy something all cash, or, you know, maybe I'll do another loan on the acquisition once we pull cash out of the In-N-Out. So Alan's actively working on that for me. Thanks, Alan. Barry Wolfe.
Yeah.
Barry Wolfe. Mr. Creative. We need to have nicknames, you know. Mr. Creative. Barry ought to be a songwriter. I mean, the thing he does online, I don't know if you guys saw his Q&A with the dog. I mean, how creative is that? Really cool.
Exactly. So no, we've been busy. We closed here in the last few weeks. We had a ShopRite up in Uniondale, New York. We closed for about $19.5 million.
Good job.
Market the year or two before, we were able to get that sold, and we had a Zaxby's and a Burger King both closed as well in the last couple of weeks. So fortunately, market is still holding up relatively well. Yeah, certainly as compared to the last recession, so far Net Lease has been holding up well.
What were those all 1031 buyers?
They were, yes, they were all three 1031 buyers. I think the vast majority of the deals I'm trading are 1031 driven. I was talking to somebody yesterday. I mean, Marcus&Millichap, we released data that shows the net lease deals, and Carly, you see this as well, about 40% 1031 driven. I think in my experience, my buyers on these deals, I think it's closer to 90 to 100% in reality are 1031 driven.
I agree. I was going to say mid to high 80s, so I'm right there with you.
What do you guys think of, I heard Biden wants to try to get rid of the 1031 exchange. I don't know if it was political, noise, but that would really be horrendous for all of us. I don't think Trump would do that, but Biden was mentioning that, which is pretty negative. What do you guys think? If they ever, do you think it's possible? They'd have to go through Congress, I guess, to get it done. And I know they tried a couple of years ago, and it got watered down. But that would be horrendous for all of us and for commercial real estate. Anybody want to talk about that or have any viewpoint on that? No?
I think it's just...
Let's start Carly, and then we'll go Fruitman. Go ahead, Carly.
I think it's very short-sighted, right? Just the waterfall effect that it would have would be disastrous. And it's not just for, quote, wealthy investors. It's everybody, all the ancillary services. I think it would really grind transaction velocity to not a complete halt, but it would be very significant. And it impacts all the different property types, all the way from the investors, the engineers, to the property managers. I mean, just all around. It's a huge industry when you think about all the related services. So I hope that that's not a real conversation, but I think it is a great buzzword topic for elections because most people don't really understand what it is or what it means to abolish it. They just hear, great, why are wealthy people not paying taxes? We don't like that. Let's make them pay, which I think is, again, very short-sighted. So, of course, I very, very much hope that it doesn't go through, but you never know. It's a crazy time, so stressful.
To make growth initiatives in U.S. We really need to continue to help the economy along for our generation. We don't want to just, put all this regulation, put all this tax, and it's going to make it really hard for everybody for the next 5 to 10 years. Alan, what do you think?
Well, Carly, I think you said it very well to begin. 2 years ago, I was at the FEA, the Federation of Exchange Accommodators annual conference in New Orleans, and the Republicans tried really hard to remove it 2 years ago. Paul Ryan was pushing hard, and it was very close. And I heard the same thing you heard about Biden, and it's real. If 1031 disappears, we're small potatoes here, but the whole real estate world, the investors, and you combine that with a likely increase in capital gain tax at the same time, and the whole commercial residential investment world will come to a grinding halt. It'll be, the unintended consequences will be really, really bad.
I agree with you, Alan. I think what we'd see is 4 years of, at least 4 years of, you just hold your real estate. It'd be, unless there's a unique circumstance, you wouldn't sell, which is Carly said, and you said, the attorneys, the title companies, the mortgage brokers, the banks. There's a lot of industries that would be very negatively impacted. And Carly, I agree. I think it'd have a very detrimental impact on the overall economy. But at the same time, I think right now, Biden and Trump are just, their job's just to get elected at this moment. They're going to say whatever they need to say, whatever they're being told to say to get in the office, either stay in office or get in the office. And then the lobbyists are going to get out, ICSCs, NAIOPs, others that'll be out very aggressively lobbying against any changes to 1031 regulations. I mean, if they want to raise capital gains rates, I think that'd be much more acceptable than one exchange going away. So I think we're early, but it's something we've got to keep an eye on as an industry. Absolutely. I mean, it's something he is talking about.
So we kind of got off the subject of Barry. Does anybody have any questions about Barry's deals? So you did a Zaxby's, you did the Burger King, and then what was the other one you did, Barry?
ShopRite, grocery center, grocery property up in New York.
And were those with repeat clients? Were they existing clients?
They actually were all repeat clients. Yeah, the buyers were all co-brokered. One from senior agent with Marcus&Millichap, but it was a repeat client of his. And it so happens two of the three, the ShopRite and the Zaxby's, both had debt. Two of the three had debt on there. The Burger King was all cash.
Anybody have any questions for Barry?
Nice work.
Thanks. Uncle Lin.
Hey, Barry, congrats. A question on the ShopRite. Did you mention that you had tried to take this out to market earlier, and then now, was it an easier sale this time?
Another group had taken it to the market about 1.5 years ago, also with Marcus&Millichap and another team. We were not able to successfully sell it. And yeah, we took it out. I think actually in some ways, COVID may have been beneficial for that. I think you've got a lot of, grocery's always been in favor, but I think even more so now. So I can't say what issues they had back 1 year or so back. But yeah, we got several offers and created some good competition and got it transacted this time.
Great, congrats.
Thanks, Barry. Good job. Crazy Ted, what's up, buddy? Ted's the outgoing one. Got all the energy. So Ted, what have you been doing? We're going to be doing an event with you tomorrow, but what's up? Are you closing deals? Or you?
Yeah, we've been very busy. Closed a short-term Walgreens last week, Tennessee. Awesome. Represented both the buyer and the seller. It was an early renewal, 5-year extension. They consolidated the Walgreens down the street and found the exchange buyer out of a small apartment in California to buy it, and it was on the market for 8 days and closed in 48 days. So it went really well. First time buyer, net lease buyer, so it was a lot of hand holding, but we got through it and got that one done, and closing a large Home Depot in 2 weeks is off market. We put together that had to get pretty creative. The buyer needed 7-year money, so had 2.5 years left on the term. I got the lease extended 5 years early for $1 million cash payment. Then Home Depot accepted the LOI and then rejected it at committee, which I haven't personally ever seen, after accepting the LOI. And then they dropped the rent 26% to get it done. So we had to adjust the pricing $500,000, but we're going to get that deal done, which will be a nice transaction too.
You don't see a lot of Home Depot properties for sale, right? There's not a lot of build-to-suit developers like Walgreens. You see a lot. CVS does a lot of sale leasebacks, but you don't really see many Home Depot local area developers selling properties. Was that just coincidence? Was this like a multi-generational deal? I guess so, because you went and you got that extension, right?
Yeah, well, they developed the whole center and the pads. Working on a couple of the out parcels right now, and they've had it for a while. And it's time to cash in on it. The sales were real marginal at best, and just being able to get. I had buyer in a $50 million exchange that was just looking for Home Depots or Walmart. So had to get creative on finding something off market because there was, like you said, no inventory in that space. And yeah, we got lucky, found the deal, and got creative, put it together. Home Depot is pretty nice to work with. Besides that, they accepted LOI and then retraded us. That was a bit frustrating. Yeah, but there's only a 3-person committee there, so it's pretty easy to work with them, and you get a fairly quick response.
So have any of you got like of the net Michael Lin? I doubt, because he's doing something. Barry, Alan, you've done some deals with Barry, right?
Oh, yeah, quite a few.
You've done a lot of.
We got to get another one going. We got a couple done this year still. Alan's fantastic. I love working with Alan. He's awesome.
Carly, have you done any with Alan, Barry, or Ted?
No, not yet. I think we've traded offers. Barry and I worked on some client advisory things together recently, and I think Alan and I have traded some LOIs or conversations. So we're close. It's going to happen, Chris, by next podcast.
So Alan and I have probably done for years, right? Alan Fruitman and I probably since '98 have done a lot of deals together. I've tried to do deals with Ted. I want to do the deal with Carly. Barry, you owe me a deal, Mr. Creative, okay?
Absolutely.
And I'd love to do some local deals with Michael Lin. Did anybody have any questions for Ted Dowding?
No, but I think that's, I just wanted to.
Probably you find off-market Home Depot. That's great. Yeah, love that.
Go ahead, Carly. Sorry.
Yeah, I was just going to say congrats. I mean, I think that's great brokerage right there to be able to work all the angles, extend the lease, find the off market, put the buyer in, make it all work from different angles. And that's what it takes nowadays. So really good job. Those are hard deals to find and make work.
Did you, out of curiosity, did you have an written exclusive with the buyer?
No, just had it in writing that they would pay a fee at X price. So it was they didn't want us to market it on the market. They wanted us to bring a buyer. They had a net number in mind and put it together. So they had listed it 3 times in the past, and every single time the buyers were trying to do a blend and extend on the deal, and sales weren't strong enough. It didn't happen, and I got Home Depot to agree before going into contract on the extension. So that was pretty unique. I haven't been able to operate with a tenant without being in contract yet. So the $1 million cash payment enticed them to talk to me and put it together. So worked out.
Okay. Did you have an exclusive with the buyer? The Walmart, the guy said he wanted a Walmart or a Home Depot?
No, it was actually, I was working at BJ Wholesale off market as well with a buyer's broker. And he saw one of my marketing pieces. The buyer had reached out to me with his broker as well. So there's a broker out of New York. And then we just started talking about different deals that we're working on. And that was the buyer that he had in his hand. So we worked together on it. So it was a lot of collaboration, but it worked out well.
Hey, Chris, let me add a point here.
Yeah.
When in a real estate transaction, for those who are watching that are not in the real estate business, when you have a really easy deal and everybody gets along and everything goes smoothly, often that's because the broker lined things up properly and the value of the broker was hidden, but because it was lined up nicely, it went smoothly. Because it was lined up well from the beginning. And what Ted shared is a different side of where brokers add value. But for those who try to do it yourself, you lose a lot of expertise. And Ted, your example is really well orchestrated.
And the relationships that you have, right? I mean, if a layman is trying to do a deal on his own and he's not going to have, like, even for the financing, I mean, they're piggybacking off my relationships, my knowledge of going with a lender that's reliable, that doesn't, reprice and has a high surety of execution. That's huge for that buyer. One, the guy's trying to get the best rate, but also he's trying to mitigate his risk, on the exchange and critical contract, monies, releasing contingencies. So really, the clients are piggybacking off of my relationships and my feedback to kind of say, okay, I've dealt with this lender. this is kind of what you got. I dealt with this other lender. Maybe they're slow. Maybe another lender offers non-recourse. So yeah, your point is well taken, Alan. Experience is everything in this, and it really gives, the key for the buyers is peace of mind at the end of the day, that they're getting a good deal, but at the same time, it's a smooth transaction, and it's going to make them feel very comfortable in the process. Let me ask you guys this, for the listing agents, do you normally try to get the exclusive, or do most sellers give you an open listing? That would be Barry, Carly, and Ted.
I won't work on an open listing personally, unless it's a very unique circumstance, like unique property. But I mean, yeah, generally I spend all my time working on getting listings and marketing those deals. I feel like we've got a bunch of listings. If somebody's hired me, I owe them. I mean, we only have so much time in a day, and I think everyone on this call spends a lot of hours doing what we do. So if you've hired me to represent you, I owe you that time. I can't go spend that time working for somebody who has no commitment to me. That's not fair to the people that did hire me.
Sure, for sure. I feel the same way for the loan brokerage agreement. I think that that way I can put much more time in with that client, and when I know they're serious, I'm going to commit to them. If they commit to me, I'm going to commit to them. But if it's like 1 foot in, out of the water and 1 foot in, nobody's going to really take that client serious. I used a metaphor at a meeting one day, and I met with this couple. It was a married couple, and I said, it's kind of like when you're in high school and a guy was flirting with a lot of girls, and the girls saw him, they didn't really respect him. And she says, yeah, I know, I married that guy. The joke there was pretty funny. I was like, oh, okay. But are you guys seeing, like, per 500,000 injected, a client will get like 2,000 a month in income per? Like, that's what I'll tell clients. Like, they'll call me and I'll tell them, you probably want to go in minimum 500,000 down, and per 500,000 you get about 2,000 a month. Million, it would be 4,000 a month. It's a good, simple way for them to understand the kind of return they're going to get on their per injected 500 grand. It's about a 5% return on their money. Is that kind of what you guys are seeing as an average right now?
Yeah, I mean, I think starting with a 5 cap is somewhat in the middle of net lease deals. So, there's obviously a huge range depending on the credit and the term and so forth. But I think it's important to look at the client's overall objectives. So return is usually only one small piece, and there's often something bigger than just cash flow driving their investment decision, whether it be estate planning or risk avoidance or some sort of concern they have with their current property, that they would sleep better at night if they could absolve themselves of whatever their situation is. So we spend a lot of time trying to get to know the clients and understand what's really driving them before we say, okay, it's a 5 cap or a 6 cap that you need, and here's a list. It's really, what's your objective, and then how do we meet that? And then we back into the properties and give the advice. But I think as a rule of thumb, 5.5 is, pretty average to toss out there.
Figure about 2,000 to 3,000 per injected 500 grand per month is what a principal can generalize, not going into specifics. Anybody else on that question? So before we kind of conclude here, I wanted to say, if you're watching Net Lease TV, we're really trying to make this very interactive, okay? So please comment below. We want to see your comments. That way, Michael, Lin, Barry, Wolfe, Alan, Ted, and Carly, and myself can kind of comment. Oh, one other thing I wanted to tell you, I am closing a deal. I'm closing a Walgreens. It is a cash out refi. It's a really cool Walgreens, 10 million value. I'm doing a loan of 3-1. In fact, right now we're going back and forth on the SNDA. The SNDA is being shipped to record. The borrower's already signed it. The lender signed it. And I think we'll close either Friday or early next week. So I'm excited. And we did a 15-year AM, 5-year fixed, 3%, which is amazing. Right now, I would say rate range, we're at like 3 to 4 3/8 for a 5, 7, 10-year fixed rate loan with a 25 to 30-year AM. Leverage is about 55 to 70. I think that's a pretty good range with a 125 minimum debt coverage. And then I just also hooked up a 7-Eleven deal. It's again, it's a cash out refi. This developer went in and he's taking out like 3 or 4. It's a multi-unit center. And what he's doing is he's taking like 3 or 4 of the tenants out and he's bringing 7-Eleven in. It's in LA, Los Angeles area. We're going to do a loan between $1.5 million to $2 million. And that'll cover his cost of buying the property, I think he did some TIs and some other things. That should close if everything's good, if it gets approved in probably September, October timeframe. We've already got the deposit. We just engaged the appraisal. So those are 2 deals I'm doing. But getting back, please comment below to all of us, because we want to make this really interactive. We want to hear your comments. And also, please subscribe. Please subscribe to Net Lease TV. That way, every time we do this, you're going to get an email. You're going to get my capital market updates. You're going to learn, what Barry and Michael and Alan, Ted, Carly have to say about the net lease market. If you're a principal, it's going to make you a much better buyer. You're going to be much more educated. And when you go in to negotiate, it's going to give you a better position when you're negotiating a deal. So definitely hit subscribe, okay? Does anybody else want to do some conclusion statements at this point?
Hey, Chris, I have a question for the group, if I may. You asked what properties we recently closed. I'm curious what everyone else is working on. What we close is really 2 or 3 months history, but I'm curious what people are working on now so we can get a feel of what tenants are active and what the buyers are looking for. I'm on the buyer side, so different than you guys, but I'm curious what deals you have that you're working on that'll give a real state of the current market.
Well, I'll share something from what I'm seeing in California. I don't do a whole lot of buyer rep, but I do have a client who's looking for a single tenant property. And Alan, you're probably not going to direct anyone in California because our cap rates here are just insanely low. There was a Jack in the Box that hit the market and my client liked it, visited, saw the location, thought it was great. It was offered at a 4 cap. We offered a 4 cap. The seller said no, it's just because they got so many offers that they decided they wanted a 3.75 cap for it. And basically no one wanted to go that low, so they took it off the market. They're going to wait because they think that's where the market is going. So that's Southern California for you. That's just kind of my input on what I see on Net Lease out here.
Yes, thank you.
I've actually been something I've been working on for a while. We've had several medical marijuana deals in Florida, and I've got a few we're getting ready to bring to the market outside of Florida as well. We've got our first one closing here, hopefully next week. I got another one under contract. So that's an interesting area. Also, several QSR deals, as well as 7-Eleven, Wawa, along those lines. So gas and convenience. So seeing kind of a cross section of deals, and frankly, seeing the market holding up. I mean, it's not as active as the last couple of years, but getting a lot of buyer calls, a number of buyer calls. We placed several deals under contract. We've got LOIs floating around on several deals this week. So fortunately seeing the market stay quite busy and vibrant for the moment.
Barry, I did watch your segment Up in Smoke, Mr. Creative, when you were in Vegas and you were touring.
Yeah.
And I loved it. You said, well, I'll sell these, but I'm not going to eat the edibles just at this moment. Do you remember that when you were in Vegas, kind of touring that?
I remember touring. Yeah, it's an interesting segment. I'm really very bullish on the sector. I mean, it's federally illegal, but I don't see that. I think it's evolving quickly. Whether it's going to be federally legal in the foreseeable future, we'll see. I mean, I think Florida will eventually be recreationally legal. Where I am, a lot of states obviously are. Alan, where you're at, California, where you guys are at. So I think it's headed that direction. yeah, financing is, Chris, I'd be curious to hear your thoughts, Chris. I mean, it's not the easiest sector to finance, but there are some options.
Anytime you get into something that federally is against the law, it's hard for the banks to get. As soon as it became federal, then it would open the floodgate. That's kind of goes back to like, I think the hardest uses are, you know, strip clubs, marijuana dispensaries, some of the like hard money lending places, day loan places, because if they ever pass a law or something, you could have a property that, you know, would go vacant, you know. So anything that's not federally legal, they're harder to finance. I do believe the dispensaries, I saw, there's a lot of lenders out of Canada, I think, that are doing them. I don't know if you've seen those, but just one other thing, what I'm really excited about is 7-Eleven purchasing the Marathon Petroleum Speedway properties. They're going to have 3,900 more stores in Canada and US, and then another, right now they have 9,800. So that's huge. Have any of you heard if they plan to do any sale leasebacks with that those 3,900 stores? I think that'll be a big opportunity for Net Lease, and we definitely want to finance more 7-Elevens.
Yeah,
I would think those would be. Alan, you can go.
Under LOI or contract now, and I really think 7-Eleven is one of the strongest tenants out there right now. Very strong. I haven't heard about sale leasebacks of the acquisition, but more inventory would be nice.
Double A minus rated. 7-Eleven's double A minus rated S&P credit. Doesn't get much better than that. Go ahead, Barry.
I would say I would think a sale, if they do sale leasebacks from that portfolio, from the Marathon acquisition, I would think they'd be institutional to a couple of different groups. I don't foresee them doing one-offs of let's say 1,000 locations or hundreds of locations. I may be wrong there, but I would think they'd approach a couple of institutional buyers to do large packages as opposed to one-offs. But I guess time will tell.
I know we financed a lot of them for when Staubach did a big sale leaseback 2002. I don't know if any of you guys, Fruitman probably remembers, but Roger Staubach bought them, and then he was flipping them, and we were just, and they had some great locations with the gas. I hope they do something like that again. We'll definitely see more supply to be able to work on, and with a double A minus, that's a great credit for buyers right now that are looking for dependability, with a high credit rating. I want to thank you guys all for being on Net Lease TV. We'll probably do this in a month again. And please, thank you so much for being on Net Lease TV. Have a great week, everybody. Thank you. Congratulations on the closings. And we'll talk to you real soon. Thanks again.
Thank you, Chris. Thanks everybody.
Thanks, Chris.